My name is Tyler Okland. I'm here today to tell you why Opendoor will be the best equity investment for the next 5 years. So Opendoor is the pioneer of iBuying, which is the business of buying and or selling a home online, including ancillary services like mortgage or title and escrow. Opendoor harnesses machine learning to forecast home prices and make automated offers and profits from transaction fees and ancillary services. iBuying was born from a universal and deep-seated dissatisfaction with the traditional home buying and selling experience. So do people like Opendoor's services? Yeah, 9 out of 10 customers recommend to a friend. Opendoor has a net promoter score of 80 plus. For those not familiar with NPS, an NPS of 80 plus is like sitting on a beach with your favorite person in the world, eating a chocolate ice cream cone with a warm breeze. Opendoor is faster, more certain, and transparent than the non-digital alternative. And in case you're not familiar with real estate tech, Zillow has been considered Opendoor's only true competition. But in Q3 2021, Zillow's iBuying business imploded spectacularly, and they shuttered it. But if Q3 was the iceberg that sank Zillow's ship, Opendoor just sailed around it, beating guidance on both the top and bottom lines and raising guidance for Q4. No company, including all of those today that are going to be pitched, has a TAM as vast as Opendoor, and none are growing even close to as fast. Can you guys see all the charts here? Okay, awesome. I'm conservatively projecting 15x revenue growth in 3 years for Opendoor. And with Zillow gone, this is Opendoor's Uber moment. Opendoor has the opportunity to do what Uber did to public transportation, what Netflix did to movies, digitalize a Byzantine interaction. And the eerie thing about digital is that we never go back. Once traditional commerce is replaced by a digital experience that is faster, easier, and cheaper, it becomes the new benchmark, the expectation. This is human nature. Traditional home buying with a realtor and stacks of paper documents will become a relic of the lost age, like bloodletting or steam energy. Remember too that as Opendoor scales inventory and ultimately holds and sells tens of thousands of homes per year, it gains opportunities unavailable to anyone else. And the company that controls the operating system of our homes will have a monopoly on the most valuable consumer-facing information in the world. Over the next few years, I expect Opendoor to entirely reimagine the real estate industry, as the opportunities to revolutionize our homes with data and technology are incredibly undercapitalized. And I see no reason why iBuying will not claim 25 to 30% of home buying and selling over the next 10 years, with Opendoor owning the majority. Trading today at just 9 billion in market cap, Opendoor is not a 10-bagger opportunity, it is a 100-bagger opportunity. That's why Opendoor is my highest conviction pick.
Hey, he said that Zillow was its only real competition. Is Redfin not competition because it's a different model, or because they're so much smaller, or what am I missing?
Yeah, that's a great question. So in the last article I published on Opendoor, I kind of did a side-by-side unit economics, including the big 4 iBuyers. So I had Zillow, Opendoor, Offerpad, and Redfin. And I made the argument that Redfin probably shouldn't be considered an iBuyer. It hasn't found a way to profit at all. So it doesn't even have a gross profit in any of the quarters that it's had so far in iBuying in its Redfin Now business. And so the numbers aren't even broken out, despite the fact that its iBuying segment is its fastest component of revenue growth. Redfin's losing a tremendous amount of money. And I think Zillow bowing out is sort of going to be a good excuse for Redfin to either say, hey, we need to join up with Offerpad, or we need to stop doing this because we're losing a lot of money.
My question would be, Zillow shut down its iBuying business because it said that it could not accurately predict the future prices of houses. What makes Opendoor be able to predict future prices of houses?
One of the arguments that I've sort of been proposing since June is just questioning whether high margin tech companies like Zillow and Redfin can truly compete in the iBuying space. And the reason is because they have these super high gross margin industry or business segments like Premier Agent, IMT. These are tech companies, growthy tech companies who have 80 percentage points of margin that they can transfer across things. And Opendoor and Offerpad are iBuyers. So they are Spartan operationally excellent companies that only get at best 8 to 10 percentage points of margin that they have to fight for. And so culturally, I think it's really challenging for a company like Zillow to make that shift. And we saw that in Q3. They're just like, this is impossible. We can't compete in this space. It's just too low margin. Whereas Opendoor has always been predicated on that belief. And as a result, they're leaner. They have been planning quietly throughout all of 2020 for the opportunity to scale as fast as they are. And I think their Q3 numbers are sort of demonstrating that they have both the pricing, the algorithmic pricing that's accurate, but then also the operational execution that allows them to have a profit, even in a quarter where a lot of home prices went down.
Hey, thanks for taking my question, and thanks, Tyler. You did a great job on that pitch. So a part of my question has already been answered about how the Opendoor has an upper hand over Zillow or the competitor because of their operational and tech advantage. So with that in mind, I was wanting to get some information about how the macro environment will play out. Like, you see the inflation things, it's all over the news everywhere. So do you think the Opendoor will still be out there, be competitively on the upper side with the macro environment against the tide? Or what do you think the home prices are going to be in the coming days?
Great question. Thank you. I think one of my biggest concerns going into Q3 was the fact that we're seeing core inflation higher than 5%. I mean, it's likely much higher than that. And to be an operator in this industry, to be able to do renovations, even small ones like Opendoor does, but also just to have contractor scale and also just the people working in such a massive business, I was worried that was going to weigh on Opendoor's bottom line. And yet somehow they've still been able to navigate this dynamic environment. I think macro concerns in 2022 will include things like rises in interest rates and home price depreciation. In regards to interest rates, Opendoor has a pretty unique capital structure so that they have only a 25% exposure per interest rate increase, right? So if interest rates rise by 1% next year, it will only impact Opendoor's margin by 0.25%, which I think is pretty manageable. So on $10 billion book of business, it's only $6 million in interest fees. So I think that's pretty good. And the other point I'd like to make is that people wonder about an iBuyer's ability to navigate a down real estate market, but Opendoor is dynamically positioned to be a market share gainer in all cycles. So if the real estate market's going down, Opendoor will hold homes for less time and be able to charge higher fees, because people don't want to hold their homes on a depreciating market for months and months and months. They want speed, simplicity, and certainty. And that's what Opendoor offers. So we've seen them be a market gainer in a red hot real estate market. I think they would do the same in a low market as well.
Modern Growth Investing, do your worst. You're up with your question.
Yeah, Tyler, thanks for the awesome pitch. I'm familiar with all the companies you mentioned. Among these, I think like Opendoor and Offerpad look to be the best. I was wondering, like, why do you prefer Opendoor over Offerpad? You mentioned a little bit about their unit economics being better. Could you elaborate on that? I feel like both have similar contribution margins, so it shouldn't make that much of a difference, but I would love to hear your perspective on that.
Awesome question. Thanks so much for asking that. I like Offerpad. I have no problems with Offerpad. In my last article, I quoted the notorious Conor McGregor. We're not here to take part. We're here to take over. That's why I want Opendoor. I want the apex predator. I want the number one best in breed, the one that is revolutionizing the entire space. That's the 100 bagger. I think Offerpad is going to build a nice book of business. And in fact, they're showing that they're at least as profitable as Opendoor in a lot of different metrics. But the difference there is that Opendoor is scaling multiples faster than Offerpad. Opendoor could do what Offerpad is doing and more profitably if they decided to sacrifice growth. But I think what they're really trying to do is demonstrate that they can both capture this massive opportunity in front of them, and that requires speed and velocity that Offerpad just simply cannot match. And so Offerpad, I think, will be a fine investment. But if you're bullish on the idea that increasingly our home sales, home buying and selling is moving towards a digital future, Opendoor is number one.
Yeah, so I think great point on getting getting all the market share before. So among both, who's the faster grower and who's ahead? Who has a bigger market share already? And it would be awesome if you could tell me like Offerpad or Opendoor already has 5% market share or something like that.
Here, I'm gonna share the my screen again real quick. This is just going to show you sort of the comparable unit
Growth.
economics in Q3. And so you can see that Offerpad is growing at 190%. Opendoor is growing at 570%. And in terms of market share, Opendoor is a little over 4 times bigger than Offerpad as of Q3. But remember that Opendoor is also growing much faster and will continue to grow much faster than Offerpad. And so that monopoly just gets bigger and bigger every quarter.
Awesome,
James.
thanks.
Yeah, so one of the big criticisms I've heard of Opendoor and iBuying is simply that the margin's low. It's 8 to 10% margin. Why should I invest my dollars in Opendoor when I can buy a SaaS company that has like 70, 80% margin, maybe not growing at 596%, but nevertheless. And then the second part is, how do they defend an 8 to 10% margin in a down market? That just doesn't, it seems really challenging to me.
Yeah, awesome. Thank you so much for those questions. So I'm invested in software companies and Opendoor. I see values either way. One of the other companies being presented today, Unity, is one of my core conviction picks as well. We can start with valuation, right? Opendoor is getting no benefits for having an 8 to 10% profit margin. So it's currently trading at less than half next year's sales. Compare that to something like Unity, which is like 30 to 40 maybe, or at least before the recent price decline. I mean, you're getting a pretty good valuation there for a lower margin business. And then I really don't like when people compare companies to Amazon, like this is an Amazon opportunity or a Microsoft opportunity. But remember that Amazon started as a very, very low margin business. Residential real estate in the United States is a 2 trillion TAM industry. And so if you can get 80% of that, which Opendoor currently has, and you've got 8 to 10% profit margins, you are minting money. And then the final thing I'd note there is that you're not investing in Opendoor so that you can have the number one iBuyer. The adjacent business opportunities that are afforded to the dominant iBuyer in the space, to the company that owns tens, if not hundreds of thousands of American homes, including subscription services like real estate prop tech, right? So like climate control, security and access, things like deals with Amazon to outfit each home that it buys with an Amazon Alexa or a Fire TV. These are opportunities that no other company will have. The real question is what will Opendoor's AWS be? And I think that its position as the dominant player in the space means that it gets to create whatever it wants.
Yeah, quick question. You said you think iBuying could be 25% of all home sales. I was just curious where you got that or how you found it.
Yeah, I think that's pretty conservative. If you look at what Uber and Netflix have done to their respective industries, 25 to 30% would be pretty low. In fact, in Phoenix, Opendoor has an 11% market share right now. That's their oldest market. And it's only 2021. By 2030, I think most home sales will be online, but I have to be a little bit conservative so that I don't sound ridiculous.